What I've seen go wrong in many, many companies is where a founder says, I'm just going to raise the capital I need to go the next 2 weeks, or I mean, believe it or not. Funding strategy for a founder. How do you take that 2 or 3 person or 4 person company and fund it for that 18-month period? It's probably $1 million at the most that you need in most companies. And it could be $300,000. It could be, if you're doing it in a geography where costs are much lower, it could be $50,000. I'm going to let this jet go, this big plane go by. If you're raising your capital in a geography which is less expensive, then you could be raising $50,000 or $100,000 for a small team, 2 or 3 people, to work away at it for a year, year and a half. And that's how you should devise your funding strategy. Just prove it out, raise the most capital you can, but have it be appropriate. And also, the other thing is, how much is it worth to you for that year and a half period for you to have that capital to take that business to that next level? And generally that's worth between, say, 15% of a company up to as much as 30 or even 35% of the equity in a company that you're giving out. At the earliest stages where you're just giving out a couple $100,000 worth of capital, you try to make it in the sort of the 15 or 20% range or so, and sometimes less, depending on what a great track record you have and how you've previously built multi-million-dollar businesses. You could get away with giving away either less or raising more. That's the funding strategy, to say, okay, I'm going to be giving away 15-20% of my company. I'm going to be raising enough capital to get to the next proof point. If you're already there, if you've already gotten with revenues, if you're already actually churning over hundreds of thousands of dollars of revenue, either per year or per month, and now you're looking at growing your business internationally, or expanding your sales strategy, or coming out with a second profitable product line, I would urge you not to come out with a second product line until you really expanded your first product line and made that extremely profitable. But if you are in a situation where you're thinking, okay, what's the next 18 months look like? Then you are able to raise more capital at that stage. What I've seen go wrong in many, many companies is where a founder says, I'm just going to raise the capital I need to go the next 2 weeks, or I mean, believe it or not, I just need a little bit of capital to get by so I can do a bridge to get by to do my Series A, or whatever. Or, people think that they can raise a Series A, a $10 million round, without actually hitting the necessary proof points. So your funding strategy needs to be a very concrete, very realistic, very triggered expectation of where you actually are, the reality that you're sitting in, and that will dictate how much capital you can raise, whether you're a seed, a later stage seed, or a Series A. Depends totally on how far you've already gotten. VC Lingo.